Hello all, welcome back. It's Mark from financialfreedomandodyssey.com here with another portfolio update. So today we're going to talk about April of 2025, and I thought I would start this one off a little bit differently than I typically do, which is from the top row in indices, and I want to talk about the Fear and Greed Index. This is absolutely wild. So 1 month ago, we were in extreme fear at 4, a number I have never seen before. Um, and now, 57. The swings are wild. And it feels like, as years go on, the swings get even more wild. So let's dive into the normal portfolio update. So at time of writing, which was not that long ago, I had I wrote here that April saw the fear, uncertainty, and doubt somewhat find an equilibrium. It has now kind of surged more towards greed within the last week and a bit. I'm recording this here on May the 7th of 2025. One other thing to shout out is the SCHD reconstitution happened on the last week of March. I believe I briefly touched on that. But that always has some kind of uncertainty, and it also begs the question in a lot of people's minds that, hey, do I still believe in the fund? Do I agree with the top weighted choices or the new top weighted companies? But at the end of the day, it follows a simple formula, right? There's not a human that picks it, and you either believe in it or you don't. I am currently still believing in it, and luckily I was able to pick up more shares at near the bottom prices. Before we go too far, just want to take a look at the indices like normal. So the S&P 500 was down about 1%. The NASDAQ was fairly flat between the beginning and the end of the month. Dow Jones was down 3.15%. SCHD, which is a subset, but generally tracks the Dow, was down significantly more here, down 7.3%. So that's related to some of the, I guess, displeasure with the new top holdings and some of the selling pressure in SCHD there. And to wrap it up, TSX 60 was down about 0.5%. Looking at the individual tickers that hold my RRSP, VDY down 1%, so down more than the TSX. XAW was down 3.5%, SCHD down 7.3%, like we talked about, and then VTI was down slightly less than the S&P 500. Just to note again, that's a total U.S. market, which, the lion's share is the S&P 500 because they're the largest companies, but it also has the smaller ones in there as well. So taking a look at my moves for this month. So my moves, another busy month. I think last month I said that April should die down. I think it did a little bit. I did less dollar cost averaging, every few days into some of my higher conviction single stock plays, but yeah, it was still busy nonetheless. So I noted here, so I did decide to deploy some of my safety funds into the growth opportunity. So I sold a small chunk of cash as well. The cash one, just a reminder, is our joint savings. So I brought that over into our joint account just because March, April, May, we have a lot of annual expenses. And, if you have biweekly payments, it is possible for them to line up so that you need to have 3 biweekly payments in a month. And May is a month where that is happening for us. So yeah, we needed to take a little bit of money out of our longer term savings or emergency fund just to facilitate that. What else? So also had some, some interesting, hopefully one-off, but at least unexpected charges. So, in the springtime, since I live in Canada, you take your car down, you get your winter tires off, you get your summer or all season tires put on, as well as the service. And we were informed that our car needed new spark plugs. So I'm like, okay, not a big deal. How much is that going to cost? So dealership told us to be about $150 in labor, and then parts would be on top of that. So I asked, okay, well, what are the parts worth? And I was told it would be 4 times, just based on the type of car that we have and the type of engine that we have, anywhere from $15 to $55 per piece. To make a long story short, ours were 51 something each, and this ended up costing us like $400. So yeah, another unexpected expense. And the big news, I've been waiting for this for a while, is that finally our tax returns did come through. And you know what? Timing wasn't too bad. In the past, I have often got my tax return as soon as possible, deployed that money only for the stock market to, short-term dip. Again, we're investing for the long term, so it shouldn't really matter, but it's still, you just feel it, right? If you invest money and then, hey, everything goes down, you just wish you sometimes maybe weren't as prompt. So yeah, it did come in. The market had recovered a little bit, but not too much, so I was still able to buy at some of the regional or local lows, I guess. So let's take a look at what I bought. So starting off with the TFSA, as per usual, I had a few moves. So I sold cash, but you may be asking, hey, I thought you previously converted your cash into SBLT. And that's true. I did do that. I did that back in the summer, and SBLT did perform a lot more, like a lot higher for us. Unfortunately, this is our safety money. This is our emergency fund. So when it started to drop pretty hard, I had to take it out to an actual, or as close to guaranteed as possible, ETF. SBLT being preferred shares of share corps is safer than, say, Class A shares of share corps, but at the end of the day, it's not just invested cash. As I wrote here, at time of writing, SBLT has recovered, so maybe unnecessary, but I can't take that risk. That's our emergency fund. Arguably, I probably shouldn't even have it in my TFSA, but I do. So what else did I do? I sold pref, so that is my just kind of personal cash reserves for opportunities like this, and I added to AMD, Google, and a little bit to QQCL once I hit my targets. Although my targets keep increasing, but I think I have them where I like them now. Outside of those sells, I bought with contributions. VFV, that's where a lot of my TFSA portion of my tax return went into. I bought some more Google. I rounded up my GDV just so I would have a little more even dollar amount with every distribution. Yeah, mostly just OCD related. It was also down quite a bit and has since recovered, so that turned out to be a decent play. And I added to HXQ. Other big news, as I've been doing the last few times, I allocated some more money, including this time a portion of my tax return to actually zero out my line of credit, which was used for bank. And you see, zero out, no more reduction. So clap for me, pat myself on the back. I don't have any more funds that are purchased. Sorry, I don't have any more ETFs that were purchased with leverage anymore since I zeroed out my line of credit. Funny part about that is, at one point, even though I was almost close to zeroing out the line of credit, when bank dropped down to 708, I think it might have even went lower than that. But anyways, I did add a little bit to it, and sorry, no, I didn't, but I thought about adding to it when it was 720. I bet you if I hit the date where it was 707 or 708, I probably would have pulled that trigger, but I didn't. So looking at the TFSA breakdown, again, this is the entirety of my TFSA only. It's our largest holding now. So our largest holding is still VDY. VFV is closely catching up. You can see cash has decreased because we took a portion of it. Not a lot, but just a small portion to help kind of buoy our joint account, which we pay bills out of. I have bank, I guess, is technically the third highest. currently, and a smattering of other ones. So we'll look at my longer bets here. So AMD is only at a 1.7%. Google's at 2.6% of the portfolio, and then Shop, which has been here for a while, this is up at 5%. I'm still really big on Shop. I think up really big, I mean, on Shop. In terms of invested capital, AMD, I think I'm going to keep as a smaller position, and then Google and Shopify, I'm going to have at somewhat similar. I may take Google higher. Talking about positions, I'm thinking of consolidating. Nothing new here. Still thinking of getting rid of TELUS and adding to, I think I'm going to add some XEI for sure, and then likely a little bit more bank. I might just do all XEI, but we will see. I did a little bit more thinking about that recently. I kind of noticed there is a cyclicality to the stock price, at least over the last year or so, where it goes up and up and up to the dividends. I might just sell like a couple days before the ex-dividend date. Yeah, I won't get the dividend, but I'll get a higher sell price, and it might be even more beneficial. But anyways, like I said, it's been kind of a dog. I don't really want to hold on to it any longer, so I would imagine I'll sell it over the next couple of months. Looking at TFSA broken down to each account, my primary TFSA I have here, and my secondary TFSA. This is what it's looking like. So still have the 5 securities. Eventually, this will just be 4 once T for TELUS is out of there. Looking over at the RSP side, yeah, so I did decide to allocate my normal, like, monthly contribution to the special account again, and I just increased the bank and QQCL. They're relatively equal. I think we have a little bit more cash invested in bank compared to QQCL. And then the tax return wise, I put most of it in SCHD and added a little bit to VTI. I was going to put it all in the SCHD, but VTI had dropped so much that, you know, I decided I should pick up a little bit. So I did that. And that has turned out to be good. Maybe I should have bought more, but hindsight is 2020. Dividends increases and decreases. So Google raised their dividends, which I don't think were paid out this month. I think it was announced that they are increasing their dividends. I'm going to wrap up just taking a quick look at the Fear and Greed Index. So yeah, this is what it was when I took the screenshot. So this was April 25th. April 25th, 1 month ago, we were in fear. 1 week ago, we were extreme fear. So then it would have been 2 weeks ago, we were like really into the single digits extreme fear. And then popping back here again, yeah, we're sitting at 57. So back into the greedy category. And yeah, that's all for this month. Thanks for stopping by and for your continued support. Feel free to like, subscribe, and if there's any questions, leave them down in the comments. Thank you.